Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking copper futures. Copper got absolutely crushed today, down over 2.5%, over 2.75% at its lows. Really getting crushed. And there's a lot of things actually bullish for copper. So let's kind of go through what was going on today and some of the weakness that we saw yesterday as well. You had Chinese data over the weekend from Sunday night to Monday morning beat handily. Now, China is the biggest consumer of copper, biggest free market purchaser of copper. And they beat on their GDP, their retail sales, and their industrial production, all three of which have been driven by a government infrastructure fiscal spending plan that uses what? Base metals, copper, iron ore, aluminum, nickel. And these things should be in high demand right now. Of those base metals, iron ore, however, is getting absolutely crushed, down 7% in the last 2 days. And there's a very strong positive correlation between iron ore and copper that's been dragging copper lower. The demand for copper hasn't necessarily eased up, but this perceived demand for iron ore, and you're seeing it, by the way, in the Aussie dollar exchange rate with the US dollar as well. It's also a strong positive correlation between iron ore and the Aussie dollar. Now that's driven because Australia is the largest exporter of iron ore. So that correlation is always going to be there. But the correlation of iron ore dragging down the rest of the base metals, especially hitting copper, because iron ore makes steel, steel goes into buildings, copper goes into electricity, gutters, things like that, which is also building. So when you see those two, that positive correlation is higher than most of the others between the base metals. Now, gold has been kind of holding in and staying higher, but the precious metal story is about geopolitics. What it seems to me is that copper and iron ore are telling you that they don't necessarily believe that the expansion we've seen in Q4 of last year is going to continue in Q1 of this year, and iron ore is leading that, dragging copper down along with it. Now, another thing that's supporting that is there's been dollar weakness lately. The dollar has been in a wide down channel since the beginning of the year, actually since about December 27th or 28th. That started. And there's been volatility in there, but if you draw that channel, you see that it's slightly pointing down. We have 6 of the last 7 days down in the dollar index. That should hold copper up, but it didn't. It did for a couple of days. It did not yesterday, and especially today. The interesting thing about the dollar relationship to base metals is that as the dollar weakens, foreign buyers, think China, think Australia, foreign buyers of those metals can buy it cheaper, so they bid the actual futures price up. Doesn't affect them because their exchange rate with the dollar is covering that price jump. So when they go in as aggressive buyers, yes, the price of copper rises, but they have to exchange to dollars to buy that copper, and they get more for their money when the dollar's weakening. The dollar has been doing that. Copper has not been very bid. 2 days ago, we saw a little bit of a bid come into it as the dollar hit its 4th day in 5, but now we've got 6 in 7 down, and copper, like I said, over 2.5% down today. It's not good for the global economy. We'll see if that reverses. This is Bob Iaccino talking copper futures from the CME Group trading floor in Chicago.